Hello, everybody. Hello, everybody, and welcome to today's FATF webinar on the recently released Comprehensive Update and Terrorist Financing Risks Report. My name is Maarten Peijls. I'm the co-chair of the FATF Risk, Trends and Methods Working Group. That's the working group that has been responsible for, among others, conducting this part of the work over the last year. I'm delighted to be your moderator for this session, where we'll be sharing the key outcomes from the FATF Comprehensive Update on Terrorist Financing Risk Report. Combating terrorist financing continues to be an important part of the FATF work. It's a priority for the Mexican presidency. This report is the first one the FATF published since 2015. Providing a comprehensive overview of the factors influencing the nature of terrorist financing risks. It outlines the methods and channels to raise, move, store, spend and manage funds or other assets with terrorist financing purposes, with a global approach. In addition, the report offers an assessment of how TF risks have evolved in the last decade. It identifies how it can continue to evolve and provide practitioners with recommendations and TF risk indicators to strengthen the measures to combat TF. Let me start with some housekeeping rules for today. As you may have noticed, this is an open webinar with a broad audience from the global network, including public officials, private sector, academia, think tanks, and any other people interested in this topic. The webinar will be recorded and posted in the FATF website and YouTube channel. In addition, given the relevance of the report, the FATF Secretariat has provided French simultaneous interpretation for this webinar. Participants are asked to select the channel of English or French according to their needs in the bottom of the screen. You can post questions to the panelists by using the Q&A feature. We remind participants that all questions are being recorded. So, today's session will walk you through the most important key findings of the report, the main trends identified, and the recommendations the report provides on how to continue strengthening the collective and collaborative CFT response. Whether you are a policymaker, a law enforcement official, an academic, a member of the private sector, someone working in the CFT field, or simply interested in this topic, we hope the findings will raise awareness of the current trends and spark new ideas on how to continue combating terrorist financing. We have the honor to be joined by some of the experts that, with different roles, participated in the development of this project. As you know, the project was co-led by France and UNCTAD, with the support of 35 project team members, representing jurisdictions from global network. And this report also built upon more than 800 inputs from the private sector, academia, and think tank specialized in CFT matters. So let me now introduce and have a warm welcome to our panel. First, we'll have the honor to hear from the project leads, Paul Hedon from France and Svetlana Martinova, UNCTAD. Both will provide us with a broad overview of the report, focusing on the factors influencing the terrorist financing risks, the main trends identified, what can be expected in the near future, and the conclusions and recommendations of the report. Second, the report has a global approach and focuses on TF trends identified across the global network. To achieve this, the work of the project team members was a game changer. Kennedy Mui ISAMLAC Secretariat will explain how jurisdictions can benefit from the report and focus on the relevance on the geographical context as a factor influencing the nature of TF risks. Third, the FATF has recognized the private sector, academia, and think tanks as key partners of combating money laundering, terrorism financing, and proliferation financing. For this project, the FATF took into consideration more than 800 responses received from these actors in the context of a targeted public consultation. Today, we also have the honor to present as our last panelist, Mr. Loai Alakwa from TRM Labs, who participated in this process and who will be presenting on how the private sector can benefit from this report and developing trend on the combination of methods, including virtual assets and online platforms to finance terrorism. So a warm welcome to all panelists. We'll also have time for a Q&A at the end, so please feel free to add your questions to the chat or Q&A box as we go along. Before getting started, for those who have not been able to read the report yet, and I would really recommend to read the report published on the FATF website, we would like to highlight that this report references to all types of terrorist actors. Terrorist organizations referred to in this report have either been designated by UN Security Council resolutions pursuant to the resolutions 1267, 1989 and 2253 concerning Islamic State in Iraq and the Levant, Daesh, Al-Qaeda, and associated individuals, groups, undertakings, and entities, or through regional and national designation regimes developed pursuant to UN Security Council resolutions 1373 and 2462 for the purposes of asset freezing. As such, mentioning of an organization in the analysis or case studies included in this report does not entail or imply the endorsement of any national or regional designations by the UN. Moreover, jurisdictions remain sovereign in their determination as to whether incorporate regional or national asset freezing lists domestically, should they meet their own designations criteria and pursuant to their own legal and regulatory frameworks. References made in the report based on regional or national designations regimes do not entail or imply the endorsement of any national or regional designations by any other jurisdictions. So with that, let us get started. Paul, welcome. So let me first congratulate you, Svetlana, and the team for this great report. This report builds upon previous published reports and delegations, private sector, and academia inputs, which is really impressive. What I noticed is that the report is structured in a very particular way. For example, section 2 refers to the factors influencing the nature of TF risks, while section 3 refers to the TF trends and methods being observed. So Paul, can you please brief us on the relation between these sections?
Thank you, Martin, and good morning or good afternoon to everyone. Maybe first of all, let me say that this report is the product of a collective effort, and that I'm deeply grateful to all contributors from FATF delegations, from the private sector, the civil society contributed, and of course a special thanks to Cited and Svetlana, as well as to FATF Secretariat and other colleagues from the working group. The outline of the report was a crucial point of discussion around a year ago, as we wanted the outline to match best the objectives of the report, which were multiple, as you mentioned, sharing a common understanding of what terrorism financing is about today, providing a starting point for future works which could take a more geographical or thematic focus, fostering terrorism financing risk understanding of competent authorities, but also and in particular of private actors, so they can implement due diligence measures according to a risk-based approach, which is key in FATF standards, and it means being able to implement due diligence in a proportionate manner, focusing efforts on and intensity on the situations exposed to greater risks, and allowing for a smooth conduct of business where the risk is low. And also among objectives of the report, helping authorities detecting suspicious transactions. So in this regards, I believe that section 1 of the report, focusing on contextual and material factors influencing the nature and level of terrorism financing risks, and section 2 of the report, focusing on the different methods and channels used by terrorists to raise, move, store, and spend funds, are both very complementary. Maybe I will start with section 1 on contextual factors, which I believe is an innovation compared to the last comprehensive FATF report on terrorism financing risks, dating 2015. And it is, according to me, a strong added value, especially as it underlines two things. The first one is that TF risks, terrorism financing risks, are not equally distributed in space and in time. Financing methods used by terrorists will depend on the type of organizations we are dealing with, on some geographical, political, economic factors. So the idea of this section was to give indications on what might be more likely to take place depending on the situation, things you are more likely to observe in a given context. This is obviously not an exact science or an automatic rule, but simply indications that are not exhaustive, not mutually exclusive, but still we believe very useful and that might help then encouraging future works with a more targeted scope. The second thing this section 1 underlines is the fact that TF channels and methods are often interlinked, combined, and therefore it's not enough to look at single terrorism financing channels separately, like terrorism in the financial sector, terrorism risk in the sector of natural resources, etc., because those methods can be interlinked. And so it was useful to have this holistic approach in a given context and see how different channels can be combined. Maybe to give a few examples of what we are referring to in this first section. For instance, when a terrorist group controls a territory, and by that we don't only mean controlling a state or whole country. It can also be a town, a rural area, even a road. It is a form of territorial control. And this particular situation, which can be observed today in some part of the world, opens specific financing opportunities to terrorist entities. Extortion, including through taxation-like systems, exploitation of natural resources, control of local business, etc. And this is not to say that these financing methods cannot be seen in other situations apart from territorial control. Natural resources can be spoiled in a clandestine and hidden manner. Civilians can be extorted anywhere, unfortunately. But when there is territorial control, such methods become particularly attractive for terrorist entities and probably easier to put in place. Besides territorial control, other material factors identified in the report are proximity with armed conflict, because it gives opportunities to divert humanitarian aid or to take part to illicit arms trade, access or control to natural resources, including and especially lucrative ones, weak governance, porous borders, predominance of informal economics. So this is the different material factors we identified in the report. Maybe another example, which this time is linked to the type of terrorist actors we are dealing with, as the reports looks at the financing trends that are specific to large network terrorist entities, specific to non-affiliated terrorist entities active at regional or domestic level, and also trends specific to small cells and lone individuals operating in a specific targeted area. This is not a taxonomy of terrorist organizations. One group can display a transnational core, but also rely on national affiliates and can inspire, encourage isolated sympathizers in certain countries. So it's not about creating categories in which we would distribute non-organizations, but the idea is rather to say that terrorist entities of different size and nature have different financial needs and have access to different financing opportunities. So maybe we can move to the next slide with the details of section 1. Thank you very much. For instance, if I remain in this example linked to the type of organizations, if we are dealing with large organizations, the existence of large-scale profit-generating activities was very much reported upon when drafting the report. Extortion, criminal activities, exploitation of local resources. Also, international financial flows were largely reported by contributors to the report, either because large groups are able to move funds among regional and domestic affiliates to finance operations, or because they are looking to ensure cohesion within the network by distributing fundings, or because large groups are able to draw donations from sympathizers located in various jurisdictions. On another hand, if we look at small cells and lone actors, many countries and international organizations insisted on a current trend of downsizing costs and transactions because of remote radicalization online, because of choosing bladed weapons to conduct an attack. Those modus operandi, they can be supported through limited resources, including legal ones like work salaries, social benefits, savings, family or community supports, or through small-scale criminality like retail, drug trafficking, fraud, robbery, etc. And maybe to give a third example regarding contextual factors, when we are dealing with terrorist groups which are racially or ethnically motivated, I think it's an interesting example because this is, I believe, the only ideology we specifically refer to in the report. And this is not to say, of course, that this is the only ideology that can motivate terrorism. It's not to say that terrorism is either racially motivated or not, but this is the one case where very clearly in contributions we received, the ideology was associated with specific financial schemes. Contributors mostly agree that racially based terrorism is often financed through fundraising events like concerts, training games, social events, or merchandising, selling propaganda items like books, clothes, this kind of stuff. So the explanation we suggested in the report is that this form of terrorism based on racial and ethnic motivations, is more likely to emerge from a legal or semi-legal sphere, including in the non-profit world, before reaching the threshold of illegality and terrorism. So those organizations often will be able to use a base of legally declared or more or less declared associations that will be able to contribute to fundraising activities. So those were 3 examples, sorry, from section 1, but I highly recommend to have a closer look at this section because again, I think it's one of the added value we collectively try to provide in this report. Then if I move to section 2 and the display of various methods to raise, move, store, and spend funds, we opted for a sectoral approach to this section, especially in order to facilitate reading by private actors. So they're able to see in the sector they're active on what are the terrorism financing risks. And this is why, as you can see on the slide, this section is divided into subsections depending on the economic sector or types of activity. Again, obviously, this is not an exhaustive list, but it corresponds to the main ones identified in the existing literature or in contributions we receive from jurisdiction and experts. I will not go into too much details because it would be a bit long and I want to leave enough time for my colleagues to also take the floor. But maybe I can mention the fact that while drafting the reports, several countries raised the issue of being able to indicate in the report the level of predominance of each method, being able to say that this one channel is very often used by terrorists, this other one is used on rare occasions. And naturally, this is variable information, and every time we were able to observe a global trend, it would appear in the report. This is the case, for instance, with cash, which is unanimously considered as still very salient in terrorism financing schemes. However, it was not possible to indicate a level of predominance for each method, as the report being a multilateral one, we had to pay attention to the diversity of situations from one region to the other. And some financing methods are frequently observed in some parts of the world, but not so much in others. So we had to remain careful in maintaining balance and not drawing conclusions that were not relevant at a global level. This brings me to my last point, which is again, because this is a multilateral report, it is very useful because it offers a common understanding of what are terrorism financing risks as of today. But in my opinion, it has to be followed by future works with a regional or national focus or domestic focus, which will be able to go deeper into local specificities to be more precise with what are the risks local actors and authorities can be exposed to, or a thematic focus to go into more details into the vulnerability of one given sector. So this is to me a starting point, but it has to be followed by additional and more focused work. I will stop here, but I'm happy to answer questions after my fellow panelists had the time to take the floor as well. Thank you very much.
Yeah, thank you, Paul, for your brief explanation. And you mentioned some interesting things. The TF channels and methods are often combined, interlinked. So it's important to keep a cross-sectoral approach. And TF risks are not equally distributed in space and in time, so useful to consider contextual factors. You said it's important to keep in mind that terrorists will never pick up one method in the list, but always likely to combine several of those. And in the same time, it's also clear it was not possible in this report to indicate a level of predominance for each method, as the report being a multilateral one. So for future work, has to be followed by work with a regional or domestic focus. So local specificities can be addressed more with more precision. Thank you, Paul. Which brings me to Svetlana. Welcome. Paul referred to how the different factors influencing the nature of TF risk plays a key role on how trends have developed. Can you explain how these TF trends have evolved the last 10 years and what should we expect in the near future? And are there any recommendations on how to continue strengthening the global capacity to combat terrorist financing? Svetlana, the floor is yours.
Thank you, Martin. And as we are getting the slides on, there they are, I would just like to join Paul in his gratitude remarks to everybody who contributed to this report, including, of course, the support of the Secretariat team and the project team itself, and many others. So if you can start the slides on the next one. Yes. I will start by just recapping that we have observed a certain degree of continuity as such in the use of financing channels and schemes. However, we also note the acceleration of methods based on new technologies and growing interlinkages between financing methods of different natures, as Paul mentioned in his presentation. Just as we did in the part analyzing current trends, it is important to take into consideration the many contextual factors to anticipate how they may evolve in the near future. Next slide, please. Overall, we expect the decentralization of terrorist operations and financing to continue throughout the world, including the enhanced role of regional financial hubs and the potential further increase in self-financed cells, each adapting to the context-specific needs and circumstances of their operational areas. The diversification of funding sources and methods at the regional and local levels may also further complicate efforts to disrupt larger financial networks. Based on research and multiple reporting, including from the United Nations, the FATF report notes that sub-Saharan Africa is now a global epicenter for terrorism, particularly the Sahel. And some of the world's most active and dangerous terrorist groups operate across borders there and tap into vast informal economies. These groups are expected to retain established financing methods while increasingly also leveraging new technologies and adapting them to local contexts marked by conflict and political instability. The still unstable and rapidly evolving situation in Syria has been highlighted for closer monitoring, especially as informal financial activities are likely to remain predominant there. ISIL Khorasan, or ISIL-K branch, continues to influence regional and global financing flows, including in Central Asia and parts of Europe. Next slide, please. The trend of terrorist supporters being of younger age, and here I'm shifting from geographical to demographic trends. So the younger age may come with additional challenges, as those young individuals are in many cases likely to rely on someone else's financial resources, but also to show even more proficiency in using opportunities offered by digital innovations, including sophisticated video gaming platforms, payment features, and artificial intelligence. We also have a dedicated section in the report pointing to gendered roles in terrorism financing, both in terms of risks, threats, but also as impact of CFT measures on certain gender groups. And this requires continued analysis and monitoring. Next slide, please. So Paul has mentioned the example of different ideologies also shaping the financing methods. Terrorist propaganda remains extensive in multiple languages, often trying to exploit political tensions and ongoing conflicts in several regions, including the Middle East, but also other regions, to appeal to new recruits and attract additional resources, including donation campaigns. Most terrorist groups continue to operate active crowdfunding campaigns via dedicated propaganda channels, including magazines and encrypted messaging channels. Despite the efforts to disrupt terrorist communications and propaganda networks, researchers note that terrorist groups are highly likely to continue exploiting platforms such as Telegram to advance propaganda dissemination, recruitment, and fundraising activities, but also may migrate to other more kind of low-profile channels. Concerns have been raised about the possibility of a spike in politically motivated violence, given the level of political polarization and instability that have been seen over the past few years in many regions of the world. Tracing financial trails related to this type of terrorist attacks comes with its own set of challenges, as Paul mentioned earlier, including inconsistent designations and prescriptions, as well as the low scale and visibility of financial activity in the preparation of attacks. Next slide, please. Although we have restated and really insisted that cash and hawala type transfers remain the prevalent methods used to move money for terrorist purposes, and they do still account for most TF-related transfers, there is also an objective increase in the use of digital tools like virtual assets, online gaming, and social media. And it is important to understand that this increase in the abuse of technologies goes along with the uptake in their use in society overall, and not just in the void. So we expect it to continue to increase and get more sophisticated, yet more and more efficient and swift as these technologies develop. Connected to the increasing use of virtual assets and progressive successes in tracing VA transactions is the growing exploitation of various obfuscation techniques. We also note that researchers caution about the gaming industry as constantly evolving with the development and introduction of new technologies. The report also points out some vulnerabilities in the banking sector in relation to new technologies, including the use of virtual IBANs. With respect to artificial intelligence, we've marked the sophistication of document forgery, including to open accounts, use money transfer services, or access virtual assets. And as I think we have noted already, the growing convergence of all these methods, for example, combining online fundraising and subsequent use of hawala or cash couriers, amplifies the challenges associated with each individual technique. Next slide, please. Another trend that we anticipate to continue relates to linkages between terrorism financing and organized crime. And this is likely to not be resolved short run, as it would require significant capacity building investment and major operational improvements by states. And in many regions where criminal groups rely primarily on cash, such convergence may mean that cash will remain the prevalent method of TF-related transactions. An interesting point that we also recommend to monitor is the fact that terrorist organizations increasingly are reaching out to professional money launderers to hire their services. Finally, resource shortage and food insecurity, whether related to conflicts or natural disasters, is becoming critical in some regions and can lead to increasing raids and excessive looting by terrorist groups. So this is an area to monitor closely as well. Now, what are we going to do with all of these evolving and seemingly non-stopping threats? First of all, and in line with the report itself, understanding exact risks, threats, and vulnerabilities, and addressing them with risk-based and evidence-based approaches are key to effective targeting. Harmonizing legal frameworks globally helps reducing opportunities for terrorist organizations to benefit from regulatory discrepancies and loopholes. Effective cooperation in TF investigations and prosecution based on coherent criminalization of the offense and robust information sharing is also essential to dismantle terrorist networks. Multilateral designations of terrorist organizations still appear as the most overreaching sanction instrument to obstruct TF, especially in relation to tackling transnational TF schemes. And these sanctions resume under UN Security Council resolutions. But also operationalizing national mechanisms for freezing terrorist funds is key to prevent terrorists from accessing funds from across jurisdictions. Next slide, please. Yes. The report highlights that room for improvement remains in several sectors covered by FATF standards, especially as terrorists tend to increasingly avoid traditional financial services, often subject to relatively more mature regulation, and opt for under-supervised money transfer services and newer or developing sectors that lack regulation or lack coherent regulations, such as virtual assets service providers at the moment. TF risks posed by a physical cross-border transportation of cash are still considered high in most parts of the world, and this requires improvement on border controls. Effective implementation of FATF standards on legal persons, including norms on beneficial ownership transparency, is key to suppress their financing activities through legal persons, whether it is by generating revenue on actual business activity or by using shell companies. Next slide, please. There are also sectors that are vulnerable to terrorism financing, but they are by their nature or by factual lack of regulation, not subject to AML-TF regimes. And they come with a whole new set of challenges, but also it is important to understand that we cannot regulate, and of course should not over-regulate all of these sectors. What is key is making them more equipped and resilient to terrorism financing without any disproportionate measures. And this exposure really calls for greater outreach to those sectors and increase the level of awareness of risks and enforcement of mitigation measures, including self-regulation and internal controls, or in the context of social media, content moderation. Both the FATF and relevant UN entities call for more collaboration between government and the private sector. Public-private partnerships have also served as a useful forum to provide guidance and risk indicators, as well as collect the feedback information. Next slide, please. Paul already mentioned that armed conflicts in which terrorist groups operate, or weak governance and resource shortages, can create increased risks for humanitarian aid diversion for TF purposes. At the same time, this also raises challenges for impartial humanitarian action where measures to counter terrorism financing may result in negative consequences. And according to several UN reports, many states still lack institutional framework to consider, evaluate, and eventually mitigate the effects of CFT measures on humanitarian activities. My last slide, no, the penultimate slide, and change it, please. Just recapping on the sophistication of methods that needs to be met by sophistication of responses. And this is all about capacity building, increasing the expertise, and developing a response that's truly joint and multi-stakeholder. Next slide, please, and it's my last one. It just recaps that the threats and methods that we have explored are increasingly adaptive, decentralized, and technology smart. The granular understanding of risks is crucial, and enhancing tailored risk-based responses is a joint effort. I thank you.
Thank you, Svetlana. So what we see is that TF is become more fragmented, technology-driven, and global in reach. And well, you said also tackling TF requires coordination and coordinated action across sector and borders. And countries must innovate and collaborate to prevent TF groups of terrorist groups from exploiting financial loopholes. Important also to notice that humanitarian systems are vulnerable to terrorist exploitation, but excessive CFT controls can block life-saving aid. So FATF stresses in this regard risk-based and proportionate approach. Furthermore, you mentioned some recommendations, for example, that Countries enhance their risk assessment to keep up evolving threats. Well, that's just where this report can be very helpful in. And another recommendation is public-private partnerships on CFT. And I add that these are really useful, effective, especially in sharing information. So thank you, Svetlana. So the global network jurisdictions were also very active in participating in the development of this report, which resulted in a report covering terrorist financing trends in all regions of the world. I would like to take 1 minute and extend the appreciation to all FSRBs, FATF-style regional bodies, secretariats, that contributed coordinating the submission of their membership inputs. Kennedy, as a representative of the SMLAC Secretariat, how do you welcome in this webinar, and how do you think this report can contribute to global network jurisdictions CFT efforts? And in addition, Svetlana highlighted geographical factors as one of the main anticipated trends in TF developments. What is your view on this? Kennedy, you have the floor.
Thank you, Martin, and congratulations to everyone who has contributed to this report, including the members of FSRB network that I represent and the global community at large. Let me begin by stating that this report is a blueprint for strategic action. It presents continuing evolves across geographies, sectors, and technologies. This report equips jurisdictions to move from reactive posture to targeted prevention and disruption. And I'll highlight 3 powerful ways in which jurisdictions can use this report to strengthen their frameworks. First, next slide, please. Thank you. So first use case for this report is that jurisdictions can use this report to refresh and refine their national risk assessments and associated strategies. This report provides insights into how contextual factors like territorial control, economies, or porous borders influence terrorist risks. Jurisdictions can therefore map these, develop strategies for specific sectors, services, and products. For instance, if a jurisdiction is seeing rise in the use of mobile money for TF, or say the country borders conflict affected regions, the typologies and indicators in this report can help validate and prioritize those risks. Ultimately, this report enables authorities to build smarter, evidence-informed strategies that are aligned to the FATF standards, but also, and more importantly, rooted in local realities. Next. The second use case of this report is through the presentation of typologies and case examples which jurisdictions can directly adopt to their context for policy, supervision, and enforcement interventions. For example, if you look at section 2 of the report that deals with various methods used to raise, move, and manage funds and other assets for TF, you will find that this report has provided actionable basis to design TF red flags and indicators. It has also given opportunity for countries to use these reports to customize their supervisory approaches and also inform investigation and prosecution strategies across jurisdictions. Therefore, countries can align their CFT interventions to evolving nature of TF risks based on the most updated trends that can be found in this report. Next slide. Now on the thirdly, no, before that one, just the slide before. Yeah, so the third use case is that this report offers a powerful tool for building partnerships and information sharing. It can be used by jurisdictions to build more integrated coordinated mechanism between the FIU regulators, NPOs, and private sector players, especially the financial sector and the ENFBPs. It also provides a shared knowledge base for regional and multilateral cooperation. And here I'm talking about mechanisms that are available, for example, through Egmont, Interpol, Financial Action Task Force, and FSRBs and other bilateral channels. Actually, if you read this report, you'll find that the value really lies in how jurisdictions will internalize the content of this report. And they will use this report to refine their assessments, sharpen their interventions, and strengthen partnership across a global network. Next slide. Now, when it comes to geography as a factor for TF, we have found in this report that terrorism financing risks are not uniform across all regions. TF follows paths carved by geography, by conflict, corruption, terrain, and by opportunity. This report has demonstrated that geographical factors direct shape of how and where terrorism factors that are influenced by geographical conditions. Example, whether you're talking about terrorist groups in the Sahel collecting taxes from miners, or lone actors in Europe using virtual assets and credit cards to donate to terrorist organizations, all that discussion you'll be finding yourself going around the issue of geography as a contextual factor to influence TF risks. Next. So the geographical factors can be classified in various ways. First, issues of geography that are dominated by governance that contribute to TF risks. We find in this report that terrorist groups adapt their funding methods to the terrain, as I've already explained. And terrain here means either physical terrain or you could talk about political terrain. For example, territorial controls allow groups to tax, extort, operate, shadow governments, or proximity as a factor of geography. If you have proximity to armed conflicts, then you may see power vacuums and blind spots that terrorists can exploit quite easily, and this enables illicit arms trade and smuggling of cash and goods. Therefore, geographical interplay is exemplified from the typologies in this report, which is very useful for jurisdictions. For instance, ISIL and Al-Qaeda in Africa have exploited weak governance structures to generate funds through exploitation and trafficking in precious metals and stones. In the European side, in contrast, on the other, relying on microfinancing strategies through legitimate salaries, credit cards, social benefits to finance their travel to terrorist hotspots. And these are issues of geography in terms of political and physical boundaries. Another example from the report that you can cite is in the context of porosity of our borders. You'd find that in jurisdictions and regions where borders are porous, there is always an environment that is created for safe transit of terrorist fighters, for cash smuggling through physical cash transportation, goods smuggling, and for also other terrorist financing for purposes. The report has also highlighted conditions created by large informal economies, which is also a context of geography, because in other regions you'd find that the economies are more advanced, regulated, and complex, while in other regions you'd find unregulated financial systems, which offers opportunities for raising and laundering terrorist funds, especially through cash-intensive or unlicensed businesses. So at this point, let me just emphasize one thing, that in context of geography, you'll find that cash remains a prevalent method. Issues, but across the globe. It is only pronounced in other areas where we see weaker regulatory environments, in conflict zones, and in remote areas with limited financial infrastructure. Next. So in my discussion so far, you'd realize that you can easily deduce that place or geography, so as to say, shapes patterns in which TF occurs. But then now, if you expand it, and my colleague Svetlana, who just presented, talked about this issue of technology. If you stretch geography to mean virtual borders, then you realize that technology is increasingly defining where terrorism financing activities occurs. And this report has highlighted where terrorist actors, especially lone actors, exploit digital infrastructure to move funds quickly, anonymously, and across borders through use of online platforms and virtual assets and other crowdfunding tools. For example, Al-Shabaab in East Africa leveraged online gambling platform registered as far away as the Caribbean for terrorist financing purposes. In such context, it is evident that a country with modest tech infrastructure can still be highly exposed to TF risks due to its digital exposure. The point is that geography as an indicator of how TF manifests itself is slowly shifting from physical and political landscapes to online spaces and digital financial channels. Next. Next. No, sorry, before. Yeah, thank you. So now, having talked about geography as a contributor to TF, what do we anticipate to see in the future landscape, where terrorists exploit weaknesses in governance and institutional controls to move funds using traditional methods. And mostly you will find that traditional methods are predominantly cash-based or informal in nature. Cash-based methods will persist, that is a given, and it will continue to evolve in some regions, while technologically influenced methods will dominate in other regions and spread to the rest of the globe as countries become more financially interconnected. In many cases, these two approaches, where you'd find the traditional method, cash-intensive nature of funding activities and the use of technology, we are seeing that they are now converging due to unique local realities. Again, geography influences patterns here in many parts of the world, but especially in Africa. As my presenters who have been prior, they've talked about issue of the sub-Saharan Africa being the hotspot. So in a nutshell, jurisdictions are expected to find value in this report to tailor their national interventions so that they can effectively address issues from a risk-informed perspective and to use the findings and the typologies that are in this report to be able to inform them of how to deal with risks. I will request my colleagues up here, but I'll be available to also give further insights once my colleagues are presented in form of questions and answers. Thank you.
Thank you, Kennedy. So this was about tailoring NRAs and strategies, and this report informs policy and operational interventions, and it can help jurisdictions build partnerships and collaborations, for example, information sharing mechanisms, both bilateral and multilateral. You mentioned geographical context as a factor influencing TF risks, such as technological risks and risks related to weak governance. And very important takeaway I want to mention is that TF risks are not uniform globally, but heavily influenced by specific economic and social conditions in the region. Thank you, Kennedy. And as I mentioned in the beginning of this webinar, the role of the private sector is key in combating financial crimes, but especially terrorism financing. This report benefited from very good inputs from private sector, academia, and specialized think tanks. Loai, your organization, TRM Labs, contributed to the report through the targeted public consultation, providing good inputs on how terrorist organizations are combining methods to finance their activities. Can you give us some of the key trends you are seeing as it relates to the use of virtual assets in terrorism financing? The floor is yours.
Thank you, Martin. Good afternoon, everybody. My name is Loai Alakwa, and I work for TRM Labs, a blockchain intelligence and analytics company where we focus on tracking and tracing the illicit use of virtual assets, including for terrorism financing. I'm honored to participate in today's discussion and share some of the trends that we have been observing, which are the growing use of virtual assets by ISIL, its affiliates and supporters, the important role of small and unregulated cryptocurrency exchanges that also act in many ways like hawaladars, and finally, the growing sophistication of threat actors in the terrorism financing space. Before I jump in, just wanted to provide some important context and reiterate what my colleague Svetlana mentioned earlier, and that is that cash, hawala, and even traditional finance likely still constitutes the majority of terrorism financing. That being said, over the last 2 years, we have seen evidence that the use of virtual assets is growing, not just to receive donations through crowdfunding campaigns or to move funds, but also we've seen how groups like ISIL in Afghanistan, which is known as ISIL-K or ISKP, have also used virtual assets to finance attacks. We've even seen some discussion among threat actors about the potential use of virtual assets to generate funds by leveraging the fluctuation in prices. That is why blockchain intelligence and analytics is critical in identifying the use of virtual assets in terrorism financing and to trace the flow of funds. A significant driver of virtual assets use by ISIL and its supporters have been the fundraising campaigns for ISIL members and families held in camps in northeastern Syria. These thousands of detainees were largely captured following the collapse of ISIL's physical caliphate in the spring of 2019. These campaigns raise funds to improve the lives of the detainees and to facilitate their escape, which typically happens by bribing camp guards and leveraging smuggling networks in the area. Donations to these campaigns are typically under $1,000 and are flowing from many countries all around the world. While these campaigns typically avoid any overt references to ISIL, there are usually many indicators that point to their ideology. And while these campaigns publicly focus on humanitarian aid, they ultimately benefit ISIL as an organization. Identifying these campaigns and specifically identifying donors can help identify ISIL sympathizers and members and support networks all around the world. This is crucial because we have already seen how these campaigns have been linked to terrorist attacks, as was the case in March 2024 in Moscow, where the cryptocurrency address used by the attackers was published by one of those campaigns. We've also seen these campaigns linked to foiled plots. For example, in the US, an individual who was planning on launching an attack on the US elections last year had donated to one of these campaigns. And we've also seen several arrests of individuals all around the world who had donated to these campaigns and were charged with supporting a terrorist organization. The last thing I would say about these campaigns is that they are increasingly providing tips and best practices to ISIL supporters on how to send donations safely, thus improving the operational security of ISIS sympathizers all around the world. The second way we are seeing ISIL and its affiliates increasingly use virtual assets is through ISIL's affiliates in Afghanistan, known as ISKP or ISIL-K. Over the last couple of years, the group has been linked to numerous attacks, foiled plots, and arrests all around the world. We at TRM have been observing their growing use of virtual assets to receive donations and to move funds. And most notably, as I mentioned, ISKP used cryptocurrency to fund their deadly attack in Moscow of last year. we were able to link the wallet used by the attackers to one of ISKP's wallets. We've also seen how foiled ISKP plots in Europe and some supporters on the continent were sending cryptocurrency to the group. That being said, I would also like to highlight a recent key disruption that had a significant impact on ISKP's use of virtual assets, and that is the arrest of a key operative in a joint Turkish and Pakistani operation a couple of months ago. While we are still seeing ISKP activity on the blockchain, we definitely have seen a decline following that arrest. Key to all this activity are the small, unregulated exchanges and individual exchangers who in many ways are also hawala brokers, and they are largely located in Syria and in some neighboring countries. They facilitate the use of virtual assets by providing on-ramps and off-ramps, which is basically the ability to convert cash to crypto and vice versa, typically for a fee. They also provide their cryptocurrency addresses to pro-ISIL campaigns who then share those addresses with prospective donors. Once a transfer is made, the campaign would go back to the exchange with a screenshot that shows the date, time, and amount so that they can receive it in cash. The last trend I'll mention here is that by and large, the use of virtual assets in terrorism financing is not very sophisticated, especially when compared to their use by nation-state actors or ransomware actors. But given the increasing number of arrests around the world, we are increasingly seeing improvements in their operational security. We are seeing them use decentralized exchanges, mixers, bridges, unhosted wallets, and fake credentials to bypass KYC controls, which is a growing concern, especially with AI. We are seeing them increasingly solicit donations in privacy coins like Monero, although based on our intelligence, we know that they still primarily rely on stable coins to move funds around. I'll end by saying that this is crucial for both the public and private sector, is to understand the recent shifts in how terrorists abuse virtual assets to raise and move funds, and to continuously monitor how these developments continue. Regulated entities operating in cryptocurrency and public sector entities such as law enforcement and FIUs must have the necessary tools to be able to detect and investigate the use of virtual assets in terrorism financing. And finally, as the methodologies become more interconnected, regulated entities must consider how they can bring data from on and off-chain together to have a full understanding of their terrorism financing risks in their products and services. Thank you very much.
Thank you, Loai. Yeah, the role of private sector is key in combating terrorism financing. And well, thank you for your presentation. We have a lot of questions. The audience is really engaged. So we received a lot of questions, and we now, the second part of this webinar, we will have this Q&A. Well, I see a question for Loai. You were the last speaker, but the first question is for you. Now that the report has been released, how do you think private sector can benefit from the outcomes of this report?
I think the report provides a very comprehensive and up-to-date overview of the terrorism financing landscape, and it demonstrates how interconnected terrorism financing has become, which then highlights the holistic approach that the private sector needs to have in this regard. And as it relates to cryptocurrency, it provides a useful list of indicators for what regulated entities should look out for when detecting terrorism financing. And I think ultimately the report demonstrates the need for using the latest technology to better detect terrorism financing in crypto and across different sectors. And that when combined with new forms of real-time public-private partnerships is extremely effective.
Yeah, thank you. I see another question. It's a question for Kennedy. The presentations reference to the persistence of the use of traditional methods to raise, move, store, spend, and manage terrorist organizations' activities. How are the risks of traditional methods different from newer ones, especially in places where traditional methods are still commonly used? Can you elaborate on this, Kennedy?
Thank you so much. Traditional methods are actually not so different from the new methods in terms of speaking just as a passing, but they are critically distinct in terms of the manner in which the informality of fundraising methods and the informality in which the mechanisms for raising and using of these funds differs. Because, you know, informal mechanisms such as cash transportation and awala and other such type methods that have been used by terrorists, they remain widely unavailable for government and the normal financial system to detect, because they operate outside the detection mechanism of law enforcement authorities and the regulators. And therefore, it is difficult for countering of methods that are related to the traditional methods, as opposed to where you find their digital footprints. I would say that they will continue to manifest themselves, especially in conflict zones and in remote areas where you find limited financial infrastructure or unregulated environment. In those circumstances, then you'll find the manifestation of traditional methods much more pronounced.
Yeah, thank you. I see another question. It's a question for Paul. How can public-private sector what can they do to foster early detection of new TF risks? And how can we remain proactive in identifying and disrupting TF risks? Paul, can you answer this question?
Thank you, Martin, and thank you for this very important question. When we are thinking of detecting TF risks and emerging risks, I think it's important to look at several stages, and in each of them, the public-private sector cooperation is key. The first step is understanding the interesting vulnerability of economic sector activities or financial instruments, financial services. This requires expertise to understand where the loopholes might be, what would be the financing opportunities for TF that we might open when we are conducting a new activities or providing on the market a new service. Then the second stage is about elaborating the preventive regulations that will enable us to mitigate the intrinsic vulnerability. And this again requires the expertise of the private sector to put in place the right framework to identify remaining vulnerabilities and what we can do to ensure risk-based approaches that mitigate risks. The third step is about monitoring transactions to detect attempts by criminals to exploit those vulnerabilities. And this also demands a partnership between private and public actors for two reasons. The first one is that private actors are the ones in direct contact with customers. They are the one with the precise information on transactions, and therefore they are the ones that can help detecting illicit flows. But at the same time, detecting those suspicious transactions requires public authorities to provide private actors with some knowledge and guidance on what are the risks, what are the methods, the attempts used by terrorist organizations to finance their operations. So it is a two-ways partnership to detect suspicious transactions. And the last stage we will see a bit circular is taking stock of what we observe in terms of typologies and suspicious transactions to see how we can improve the regulation, the preventive measures we put in place. At every of those stages, it's important to have the public sector, private sector on board because they have the knowledge, they have the expertise, and they are well positioned to anticipate what will be the consequences of the suggested regulations, what will be the loophole remaining, what will be efficient or less efficient. So this is why it's absolutely key. And just to insist on the fact that this is relevant for AML CFT obliged entities, which are the private entities the most exposed to terrorism financing risks. But we've been also touching upon in the report and in our presentations today, private actors that are not obliged but are still confronted to TF challenges. We mentioned messaging apps and social media. We mentioned online gaming, e-commerce platforms. So there is a need for dialogue, for raising awareness, for risk indicators, and we have an annex in the report, which I think is also very useful for private actors to understand their TF risk exposure. And we need more of this collaboration between private and public actors at every stage of the detection process. Thank you, Martin.
Yeah, thank you, Paul. This might be very helpful for the awareness for jurisdictions to start or to enhance their public-private cooperation, their public-private partnerships. The audience is really engaged because we have a lot of questions. I see a question for Svetlana. Svetlana, how have threat actors evolved to circumvent TF controls? Can you answer this one?
Thank you, Martin. First of all, and as you have heard from the presentations and hopefully read from the report, there are three things that are very basic. Terrorists use to opt for A, what's available in the context they operate, B, what fits best their goals, and C, what's less risky in terms of enforcement. And it's this last aspect that is crucial for this question. If controls are effective and TF activity is prevented, detected, and suppressed, those channels will be used less frequently. Those sectors that are not regulated, not properly overseen, or are simply not equipped to deal with the TF threat will be used the most. For example, following a more uniform adoption of increased due diligence measures for wire transfers back in the day, particularly in the regions bordering conflict zones or high-risk jurisdictions, terrorist financiers adopted a method of making transactions using bank cards, which permit transactions in small amounts, instead of doing traditional electronic transfers in larger amounts that are the threshold ones. To further conceal their financial trails, they have used bank cards with false identities and forged documents or issued by financial institutions registered in third countries and connected to electronic wallets. Cash couriers often use complex routes to avoid detection and also would transport relatively low under thresholds amounts. With increased scrutiny on the MVTS sector, including licensing and AML-CFT supervision, facilitators often operate through multiple small transactions and by mixing physical cash movements and banking services to avoid detection. At the same time, the introduction of effective AML-CFT measures to protect banking and MVTS sectors have led to them shifting their interest to more complex and harder to detect approaches. And this includes increased use of social media, mobile applications, instant messaging services, and mobile money, especially in jurisdictions where registrations of SIM cards is not controlled and mobile money operators are not subject to AML-CFT regulation, or are simply unaware of TF risks they face. The rise in use of virtual assets perceived as offering greater anonymity has added another layer of complexity, although, as we have noted here, recent law enforcement and private sector operations have begun to chip away at this perceived advantage. These examples also confirm how important it is to stay on top of TF trends, continuously analyze their evolution, and to ensure a risk-based approach that adapts at the same pace as the threat. Thank you.
Yeah, well, thank you, Svetlana, for your extensive answer. One more question. It's a question for Loai. What practical steps can financial institutions, fintechs, and virtual asset service providers take to better detect terrorist financing? Loai, floor is yours.
Yeah, I think I would reiterate the importance of having access to the necessary tools and intelligence. Blockchain intelligence companies, threat intelligence companies, subject matter expertise, and proactive monitoring is key in identifying terrorism financing campaigns, especially since many of these campaigns avoid any sort of overt references to terrorist groups. Threat intelligence is also important in identifying the small unregulated cryptocurrency exchanges and hawaladars that in many cases facilitate their activities, which enables the mapping out of financial support networks around the world. And then obviously, strong KYC controls are important. But even though I mentioned that there are becoming challenges with bypassing those KYC controls. Thank you.
Yeah, very helpful. Thank you. So I think now we will do the last question before we wrap up this webinar. It's a question for Svetlana. What are the main priorities in countering terrorism financing over the next 5 years?
Thank you, Martin. And I'll try to be brief because at CTED, we actually annually publish gaps assessments that highlight these priority areas as gaps, but also for capacity building. And the first one is exactly why we're here today, is the persisting shortfalls in understanding the multifaceted and evolving risks that relate to terrorism financing. So I hope we're helping with that. The second relates to TF offense, and while we see progress in aligning how it's criminalized, investigating and prosecuting this offense remains challenging on many levels, from technical expertise to capacity and interagency cooperation. The third is the alarmingly slow progress in assessing and addressing TF risks related to new and emerging payment and fundraising technologies, despite urgent call for action by Security Council of the UN and the FATF itself. Fourth, we also see that many states underutilize their national asset freezing mechanisms and have not made any designations or frozen funds in recent years. And finally, and it's important to underline here, states continue to face significant challenges with respect to institutionalization of public-private partnerships, the integration of human rights obligations and gender considerations into their CFT measures, and having dedicated measures to place to evaluate and eventually mitigate the impact of CFT measures on exclusively humanitarian activities, legitimate NPO activity, and financial inclusions. And FATF is doing a lot of work on this under the unintended consequences block, and we are very happy to support that. Thank you.
Thank you, Svetlana. And it's also good mentioning that the close cooperation between you and CTED and FATF in this important work on countering terrorist financing. And as a result of this cooperation, is also this report. So we are almost out of time for today. So I really want to thank the audience for your engagement and active participation in the questions. And let me conclude by wrapping up the main outcomes of this webinar. Depending on contextual circumstances, terrorist organizations and individuals exhibit varying financial needs and consequently adapt their financial management strategies accordingly. Material factors and type of terrorist organizations can influence the nature of terrorist financing risks affecting the jurisdiction. We heard that there is a growing interconnection between methods and channels to raise, move, store and spend funds or assets. Informal mechanisms such as cash transportations, hawala and other similar service providers remain widely used, particularly in conflict zones and remote areas with limited financial infrastructure, offering anonymity and operating outside regulated systems. These methods continue to evolve with large terrorist networks adapting digital adaptations of hawala and other similar service providers, including blockchain-based pseudo-anonymous transfers, mobile money platforms, and digital platforms. The misuse of legal entities remains a persisting concern. To generate revenue, terrorist organizations have also been reported to exploit trade and trafficking natural resources, energy commodities, agricultural products, wildlife, precious metals, and stones, etc. They are also relying sometimes to a large extent on proceeds from various criminal activities. TF evolutions during the past decade. So while traditional financing channels and schemes continue to be used, there is a marked increase in the interlinkage between diverse methods and the integration of digital technologies with conventional techniques, adding new layers of complexity to TF activities. Operations have become increasingly decentralized with regional financial hubs and self-financed cells playing a larger role, adapting to local context and employing a broader range of funding sources, from criminal proceeds to investments in business activities. At the same time, the threat posed by lone individuals, often younger in age, is rising, with such actors relying on microfinancing strategies drawn from both licit and illicit sources, as well as technology-enabled methods, including, for example, gaming and social media features. Geographically, the report notes that sub-Saharan Africa, particularly the Sahel, has emerged as the global epicenter of terrorism, significantly influencing the patterns and geography of TF flows. Developments in Syria and their potential impact on TF-related financial flows also requires close and continuous monitoring. For example, ISIL Khorasan continues to pose a significant threat in Afghanistan, but also in Europe and Central Asia, where it actively seeks to recruit and fundraise relying on advances propaganda tactics to gather support. Looking ahead, the report lays out several anticipated challenges with multiplying armed conflicts that also involve terrorist activity and continuing exploitation of humanitarian causes for terrorist propaganda. The risk of humanitarian aid being diverted for TF should be monitored, while ensuring full respect for international humanitarian law. In addition, resource scarcity, especially food insecurity driven by conflict and climate-related events, may also heighten regional vulnerability to exploitation by terrorist actors through looting and coercion. Finally, the enduring convergence between organized crime and TF is likely to reinforce the use of cash as a preferred channel. So having said this, we hope this webinar was a good way to understand the updated TF risk report. Many thanks for your insightful and relevant questions and observations. I would like to thank the panelists for their valuable contributions. Also, a huge thanks to France and UNCTAD in co-leading this impressive project. I would like to thank the project team, members from the Global Network. This report is a result of a collaborative work from more than 35 team members from the Global Network who together joined efforts to produce a high-quality report. I would like to thank the more than 80 delegations that provided inputs to this comprehensive report, and also the more than 800 private sector entities, think tanks and academia that provided inputs to the report. And a big thank to the interpreters today in translating and in providing interpretation into French. And last but not least, a big thank you to everyone in the team behind the scene in organizing this webinar, the FATF RTMG staff. Thank you all. So hereby, I would like to encourage you to stay tuned for the upcoming webinar which will focus on complex proliferation financing and sanctions evasion schemes. It will be hosted next week, the 29th of July. And please visit our FATF website and YouTube channel, where you can find the latest published reports and webinars. Thank you for today.